Hi everyone, my name is Piterpakulski. Today we'll continue building financial model for a property acquisition. So the legend of this financial model is very simple. So we are going to buy a house or an apartment, and we are going to find a tenant for this apartment or a house, and our revenue will be the rent. So in the previous video we've created, so we will have a 10-year horizon for this financial model. So all blues here are the inputs. So we've created, here we have the basic inputs, the house or an apartment price, then the amount of down payment, then we specify the loan term, the interest rate, the grace period for the principal payment and interest payment of this loan if you do have any. Then we specify when we start this deal. Then we create the portrait of the revenue. So first, for example, it takes us 4 months to get the first tenant. From the moment when we buy this house or an apartment. Then we assume that so all these parameters are variables, so we can change them the way you want. So then we specify the average leasing contract period. Then the tenant leaves the project, and then we need some time to find a new tenant, and we can also specify this period, because during this period we won't have the income from the rent. So that's why we can play with these parameters, with these inputs later. If you find this video valuable, you may give us a like, subscribe, share this video with your friends. You can also order financial models from scratch for your unique business ideas. We can help you with that. I will be giving all the links how I create this financial model from scratch in the description of this video when the whole model will be ready. And also at the end screen of this video I will be giving you the link on the whole playlist where this financial model will be located, so you can watch the whole process of creation of this model from scratch. So today we will start putting these numbers inside the timeline. So today we will focus on the timeline. So I will create a new table. I will call it project timeline. So the first year of our projections is 2023. We'll have here January. So this will be the end of our project. This will be the end of 10-year horizon. Here we will put different parameters that we will need to calculate the revenues, direct expenses, and so on. So we are automizing the timeline, because if we want to displace our project from, for example, 2024 to 2025, we can just change the number in the top of our financial model, and all these numbers will displace automatically, and we won't have to copy paste all the timelines that we created. Now I will use some different colors for each year. So now I'm done with the timeline, and the first parameter I have to put inside this timeline is the moment when we start the deal. So deal start 0, 1, 0. So 1 means that we are starting the deal. So if and this value equals to this value, and this value equals to this value, then we put 1, otherwise 0. Then we are extrapolating this formula to the right. So here in April 2024 we can see 1. We can, for example, displace it to 2023. The next exercise we will be calculating time to the first deal, because during these 4 months we are not going to be having the revenue from the rent. So that's why we need to count 1, 2, 3, 4, 5 months till August 2023. So for the first month the formula will be very simple. For the next month we will create if, and so if this one equals to 0 and this equals to 0, this will be 0, otherwise we are creating the second condition. So if this one equals to 0, this is more than 0, then we are putting 1. Then if this value if this value is more than 0 and this value is less than 4, then we are freezing this cell. Then we are adding 1 to the previous value, and then we put 0 and closing the brackets. So here we can see these months of the period when we are searching for the first tenant. So here, for example, we purchased the house or purchased an apartment, and then we are searching for the first tenant during this period, these 4 months. And our next step will be to put 1, in this case 1 we will put here in August 2023, when we start the cycle, the leasing cycle. So this cycle, leasing cycle start. So here I will just put 0, and for this cell I will write a very simple formula. So if and this value is more than 0 and this value equals to 0, then we put 1, otherwise 0. So actually we're describing this moment when this period is over. I'm pressing enter. So I'm just describing this moment to put here 1. This is the moment when we start leasing our first leasing contract. And now we will be counting these cycles, 26 months. So this is the contract time plus months during this period we will be searching for a new tenant. So from this moment, leasing cycle count. So let's say, let's give a definition of this line like this. So this formula will be very simple. So the next, this will be, the formula for this cell will be if and this one equals to 0 and this one equals to 0, then we put 0, otherwise then we're going to copy The next condition will be if this is more than 0, then we will put 1, and if and this value is more than 0 and this value is less than this value, the cycle of the deal, the cycle of the contract, leasing contract, then we will add 1 to previous value, otherwise we are starting a new cycle. Now I'm pressing enter. So here we can see the count of the months inside the contract. So here we have 26 months, then a new contract starts, and now we are ready, almost ready for the revenues. So this will be the topic of our next video. I will be giving the links in the description of this video to the whole process of creation of this financial model when the whole process will be ready, and also I will be giving the links on the process of creation at the end screen of this video. So all the links will be shared in the playlist at the end of this video. So like, share, subscribe. You can also order financial models from scratch for your unique business ideas. We can help you with that. So see you guys in next video. Thank you and bye.